Hey everyone! Today's video is packed with major updates from NIO. This isn't just business as usual. We're talking bold moves, internal pressure, future models, major discounts, and international strategy shifts. NIO is making waves across several fronts, from their upcoming ES8 model to surprising price cuts, global expansion updates, Firefly customizations, and even a rare personal statement from the CEO himself about accountability and the company's future. So, let's break everything down one by one, because this might be one of the most critical chapters in NIO's journey. This is not financial advice. Please do your own research. Let's begin with the most eye-catching headline: the new NIO ES8. While this SUV isn't due for launch until the final quarter of this year, with deliveries expected early next year, NIO has already made its full specifications public on their app. That's a bold and unusual move for a company that's known to play its cards close to the chest. The specs are impressive. The vehicle stretches 5.28 meters long, is 2.01 meters wide, and stands 1.8 meters tall with a 3.13 meter wheelbase. But the real highlight lies in its technical configuration. It features a cutting-edge 925 volts architecture and supports 5C charging up to 765 amps. That means a blistering 600 kilowatt peak charging speed, fast enough to add 250 kilometers of range in just 5 minutes. For those using battery swap services, a full charge swap can be completed in 3 minutes. Power-wise, this SUV combines a 180 kilowatt induction motor with a 340 kilowatt permanent magnet motor, delivering a total output of 520 kilowatt. It's built using silicon carbide semiconductors, which is in line with NIO's newer efficiency, first direction, and high voltage powertrain goals. But the issue? NIO may have jumped the gun here. By revealing this so far in advance, they risk cannibalizing current vehicle sales. The ES8 isn't here yet, but its mere announcement is enough to make buyers reconsider the current generation. Which brings us to NIO's recent price cuts. Despite just launching the refreshed 2025 versions of models like the ES6, EC6, ET5, and ET5 Touring, the company has already applied what they call a preferred discount. This discount amounts to 20k RMB, or around 2,500 USD. On the surface, that seems like a standard promotional push, but when you consider the timing, it feels more like a desperate move. Some customers took delivery of their new vehicles only to discover within hours that the discount had been introduced, effectively overpaying by $2,500. In return, they were given just 2 free battery swap vouchers as compensation, which many argue falls far short of the monetary difference. Such quick discounts suggest that initial demand hasn't met expectations. Perhaps the buzz around the upcoming 900 volts ES8 is overshadowing the current lineup. And who can blame customers for holding off? If something significantly better is just a few months away, why rush to buy now? There's another risk at play here. China's EV subsidies are expected to phase out at the end of the year. By overhyping a vehicle that won't be delivered until after that deadline, NIO might inadvertently push buyers to explore other brands or models just to capitalize on those remaining subsidies. People might opt for in-stock vehicles from other automakers instead of waiting for the ES8 and missing out. It's a misstep that NIO has made before, and it seems like history could repeat itself unless they manage this rollout carefully. A more subdued pre-launch strategy could have avoided this entirely. Now let's talk about something more upbeat: Firefly. NIO's budget sub-brand is already proving to be highly adaptive. In response to customer suggestions, Firefly has now launched new customization options. Owners can purchase interchangeable inserts to modify the appearance of their vehicles, giving each car a more personal, standout look. This move shows that NIO is listening to its community, particularly in the younger, budget-conscious demographic that Firefly is targeting. These aesthetic upgrades help Firefly distinguish itself in a crowded market, where personalization is becoming a big selling point. On the international front, NIO is also shaking things up. Their direct-to-consumer model, which they've employed in markets like Denmark, is being scaled back. Instead, NIO will be pivoting to a franchise dealership model across several European countries, including Portugal, Greece, and Denmark, starting in 2025 and continuing into 2026. They'll partner with established automotive groups like the Job Group and the Motor Dynamics Group to handle sales and distribution. This change is significant. It suggests that direct sales may not have been as effective or cost-efficient in these regions. Franchising allows NIO to avoid the high costs associated with operating NIO House's massive brand experience centers, which require substantial investment and upkeep. Letting local partners manage sales allows NIO to scale globally without burning through capital. These dealerships will also have the option to install battery swap stations, though that would depend on their own investment decisions. And now to perhaps the most surprising part of the story. CEO William Li himself issued a rare and public ultimatum. In a recent interview, he stated that if NIO fails to become profitable soon, it may be time for someone else to step into the CEO role. After over a decade of operations and massive cash burn, the pressure is mounting. This doesn't mean Li will walk away from the company entirely. He could move into a more strategic chairman role while bringing in someone with deeper automotive experience to handle the day-to-day operations and financials. The goal here is clear: make NIO profitable or prepare for leadership changes. It's an honest admission that things can't continue the way they have. And in some ways, it's reassuring. Whether through a refreshed management structure or actual profitability, change is coming. So what does all of this tell us about NIO? They're in a high-stakes phase. On one hand, they're building incredibly advanced EVs, pushing boundaries with 900 volts technology, and engaging users through customization and franchise partnerships. On the other hand, aggressive discounting, early model reveals, and internal pressure hint at underlying challenges. Personally, I think NIO has what it takes to pull through, but only if they tighten up their strategy. Don't announce vehicles too early. Manage customer expectations better. And above all, get closer to profitability. They've got the tech. They've got the vision. Now it's time to get the business model right. What do you think about this strategy shift and CEO's comments? Do you believe NIO is on the right path, or are they setting themselves up for more trouble? Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.